Hello, everyone. Before we get into the overall, analysis of the stock market, I just want to show you meat. So we still have at least one stock that's doing very well for us. I'm sorry that we couldn't put 20%, 50%, 100% of our capital into this one name, but to do so would have been insane. However, I just want to show you that meat is up 108% since our October 9th signal. It's a very excellent move, and it's even up further after hours. I believe like another 5% as it's around 420. So we now have about 115% plus gain on it. But I want to remind you just really quick that meat, it had a great setup, but it wasn't beautiful and perfect, picture perfect. But one thing that it did do is it worked immediately, and that caused us to have a gain in it and be able to ride it the whole way up. As you can see, it's never made any lower lows, constantly making higher lows. And this is how new long positions are supposed to act. Now, we just took a new long position recently in OA, and it acted perfectly at first. Immediate breakout follow through on even stronger BOP in the lower screen and stronger volume with another pocket pivot point signal. But now it's pulling back on heavier volume. So what I recommend here now is, now that we have a small loss, you can split it up into half your sell stop below 90.76, so that way you only lose a little bit on the first half, and then we maintain our final sell stop at 88.17. But that's how I would play trades in today's market. We haven't had a whole lot of trades since then. OUT was our new long yesterday. Gap down to 2171, so that gave us a great entry. Still potentially it could have worked, but it moved below 2132. I believe I got sold out at 2130. That was that. No harm, no foul. But once again, new longs just aren't working the way they should. OA, despite its immediate follow through, the fact that it pulled back at all today on heavier volume is worrisome that could easily follow through, and this could be another fake out breakout in this overall market. Even though that was a beautiful start, I just want to remind everybody how OA started and how meat started is what you want to see. If they pull back, it's fine. Just go ahead and pay the commissions. It only cost me $1, so I really don't care. But it's not really worth letting these stocks pull back. They don't move immediately higher. Just get out. So OUT, going to have my first sell stop, 90.76. My final one still 88.17. Just in case it works out. I didn't put a whole lot of money into it, so I'm not risking a whole lot. Now, overall, besides OA and meat, these are the main two that I need to work sell stops on. Meat, I still want to keep my first sell stop below 364. My final sell stop will now be below 320 as it's getting more parabolic. If it closes up, like let's say at 420 or higher tomorrow, if volume is the biggest of its entire move, I'm just going to sell half at the market in the morning on Monday following Friday if it does have another up day. It's getting really extended here, but I want to see how far it goes. So I want to use 364 as the first sell stop and 320. And I know technically with this one, our last and final sell stop should be back here at the November lows, but with it getting a little crazy, I really doubt that this one gets crazy, pulls back normally, sets up another base, and then breaks out. So if it pulls back here, it's going to probably top. So we'll see what meat does. I'm raising my stops on it overall. Intraday, I got knocked out at NVRO, and by the end of the day, it's fine. My first sell stop was just below these support levels at 64.19. Damn thing traded down to 63.66 before reversing. Looking at my internal oscillators, though, this chart looks terrible, so I really have no interest in buying it back. There were a lot of full sells, VEDL fail, CPGX fail. Both of those are speculative. OUT fail, speculative. Higher quality, WB fail, BNCN. That's a confirmation rollover basically to me on the heavier volume. Same with EFSC, so those are failed. EPAM closing below the 200-day moving average fail. So as you can see, it was a pretty bad day. Also, FSB is a 50% end-of-day sell signal, and STMP closing below the 20-day moving average on heavy volume is a 50% sell. Once again, just an ugly day. I think I'm still tracking, though, right around 20 stocks on an end-of-day basis, and only 2 of those are basically short positions, UVXY and SDAL. It's unfortunate the way this market's played out. If I could codify my gut, that would be great, but I can't codify gut conviction. But as you all know, I was pretty determined, a couple weeks ago that what we're looking at is a major topping process. It's unfortunate I couldn't act on it, but, at least we've mitigated the damages. It's been a bad, overall, year if we go back to the beginning of last year with now the NASDAQ down, but the Russell 2000 going back to the start of 2015 is now down a whopping 11%. And the Dow Jones Transportation Average just keeps on getting uglier. Look at that sell-off. This thing is now down 23% in a little over a year. That's some ugly action. And while it's getting a little oversold, as you can see, there are some positive divergences slightly in the oscillators, so that could be good if we start to bounce here. But even though that we're oversold, this thing could easily get more oversold with the way that it's selling off on the heavy volume. Like, this isn't anything climactic yet. I'm going to need to see a volume bar comparable to the December move here, with us even selling off further below the 50-day moving average. But this stuff is pretty ugly, folks. I mean, I can't stress that enough. This Russell 2000, now looking at the biotech index, the XBI and the IBB, this is just absolute garbage. And then look at like KBH, the home builders today. Look at Goldman Sachs and look at Citigroup. I haven't even seen Bank of America, but yeah, further confirmation. And then whenever you look at Amazon and Facebook, they're now starting to sell off below the 50 on heavy volume, and Google. And it should be no surprise that we actually do have one new short signal tonight, and that's Netflix. Following the gift of yesterday's rally in Netflix, we were able to reverse right at the 50-day moving average. And even though I'm going to risk more than I would on this position, I'm pretty confident that it's going to move lower. So I'm going to put 2% into Netflix in my margin account on a short position. I would love to buy puts here, so I recommend, if you guys trade options, to buy puts. It is something that I'm considering. If I would do it, it would have to be, I would buy basically a 125, maybe a 120 put. I'd make sure that it's in the money a little bit so I could cut my loss. So I'm looking around 125, 130, 120 puts on Netflix, which is what I'll probably do, but it would be 2% of my account portfolio, as I think Netflix should easily come back down to these August lows minimum if it does turn out right. But the bottom line is that this market is in a lot of trouble. The NASDAQ and NASDAQ 100 is rolling over on extremely huge volume. NYSE volume and S&P 500 volume starting to pick up with another distribution day. And I tell you what, all I'm looking for now is a bounce into resistance levels, like the November, December areas. I'll be hoping a bounce there. We got a death cross about ready to occur on the S&P 500 again. The NASDAQ and NASDAQ 100 would love to see the same thing again. Get everything lining up, as 2016 is looking like it could get quite ugly. I mean, China, here's the FXP. Look at the yen. Just absolute carnage out there. Just looks ugly, ugly, ugly. I just don't see how anybody can be bullish here, though I do still see a lot of people looking at good-looking base patterns. But when KGC and SPWH are the only two stocks that I flag this evening from long positions, it tells you that we're in a new kind of market era here. It's going to take a while to fix the damage, especially when your leaders that you want to see leading, like biotechs, Russell 2000, Dow Jones Transportation Average, look the way they do. There's probably going to be a lot more pain before there's a lot more good news for the bulls. So buckle up. Cash is king. Hopefully we can continue to nail shorts. Ears, my short at 775 would have been beautiful yesterday. Today it would have worked out. The 740, I had to cut my loss at 747 intraday. Ears is starting to work lower. LPTH, look at LEI. No shares to borrow. Unfortunate, but there's still some shorting opportunities out there. The U.S. dollar looks terrible too. Could be a trend following short signal there. I'm not taking it, but that looks pretty bad. This market looks pretty bad. Be careful, everyone.